Fundamental analysis, technical analysis, combine both of them. The debate that can rage between two traders on whether fundamental analysis trumps technical analysis can be pretty entertaining at times. You'll see them hold tight to their opinions, and you really have to applaud their passion. And at Netpicks, we understand the basic fundamentals of what we're trading, but when we're actually trading the instrument, we follow the technical aspects of the market. And why? Well, I could find 10 different opinions for where the economy is going next. You would hear from the experts who will convince you with ease of one direction, only to listen to someone else and feel entirely different. Recession, depression, the coming economic boom. And a perfect example of this is the stock market. People have been predicting the crash for a few years now, even though we are continually making new highs. You know, people have been trying to short this chart, but this monthly chart shows that regardless of any fundamental pontificating, on a technical basis, this chart is still bullish. On a more technical level, the last few months is showing a lack of conviction, but to think you're going to pick the top is a fool's game. You turn on the financial networks, and you can hear almost on a daily basis someone that's making a case for a crash. They will talk geopolitical factors, and they'll insert other variables and buzzwords, attempting to show the pending supply-demand imbalance, but in the end, traders drive the markets. And regardless of the fundamental analysis they dazzle you with, other traders, those that move the markets, well, they have to buy into those talking points. And you basically get lucky when it comes to trying to do real fundamental analysis. Let's face it, educated guess is probably the best that anyone can really do. Even if the economic outlook shows a strong imbalance in one direction through fundamental analysis, price does not always have to follow suit on a technical level. I love this quote here. Markets can remain irrational longer than you can remain solvent. Now, I'll admit, I am not smart enough to dissect every aspect of what makes up fundamental analysis, but in the end, what makes money is price movement. And there can be many reasons why price is making the move that it is, but all I care about is how it's moving. Is it making new highs and lows, or lower highs and lower lows? Is it forming a consolidation pattern that I can recognize? Is price moving with momentum, or is it moving like a snail? Now, answers to those types of questions can be enough to make money with. Now, in charts we trust, that is the mantra around Netpicks. Why? Rather than delude ourselves that we can analyze thousands of global fundamental data points or analyze thousands of lines of financial statements from a company and come up with a trading plan, we would rather let the trading chart do the talking. And charts talk, boiling it down to numbers and a graph. All those thousands of data points cause the charts to dance, to happen, and personally, that's much simpler to assess. A two-dimensional chart boils down all those facts, the rumors, the figures, the opinions, both macro and micro, to a two-dimensional chart. Technical analysis involves the belief that all knowable factors that affect price are already built into the current price. And sure, there are events like Hurricane Harvey that can cause havoc in the market, but overall, technical analysis as opposed to fundamental analysis assumes price discounts everything. It's Dow theory. Here's a great quote. The first basic premise of Dow theory suggests that all information, past, current, and even future, is discounted into the markets and reflected in the prices of stocks and indexes. But even then, the risk of such an event are priced into the market. And I'll say that one of the biggest knocks against technical analysis is that there is some subjectivity to it. Well, another knock from the detractors is that technical analysis is a self-fulfilling prophecy. Well, there's a contradiction there when you combine those two statements. We believe in the words of Martin Pring. They are a reflection of the trend in the hopes, the fears, the knowledge, optimism, and greed of market participants. The sum total of these emotions is expressed in the price level, which is, as Garfield Drew noted, never what they, for example stocks, are worth, but what people think they are worth. The traders at Netpicks here, we believe it is much simpler to see emotions on the chart than it is to dissect and reassemble all the fundamental data to come up with a tradable analysis. And regardless of how good you are at trading the chart, you will never get a 100% clear picture as your understanding is limited by your experience. So yeah, you're going to be wrong. But with the right set of rules, the indicators, trade plans, you can absolutely put the odds in your favor. Where fundamental analysis could be a 50-50 bet at most, with proper technical analysis, you can actually get 60, 65, or even 70. But win rate is not the overall measure of a profitable trading system. Fundamental analysis may give you an idea of what could happen. Technical analysis will not only give you an idea, but also where something can happen. Information is great, but not knowing how to apply it makes it pretty useless. The trading strategies that we design here at Netpicks, we look to analyze the market and give entries, exits, and even trailing stops. Our trading strategies are based around technical analysis because they avoid, number one, analysis paralysis as you seek to implement the 100 fundamental factors that you just analyzed. Second, guessing where to enter your trades and get out for profits or a small loss because trading with emotions is not a professional trading approach. 3, using an incomplete trading strategy as every aspect is tested and it's made into a complete trading plan. If you were to approach trading from a fundamental analysis standpoint, you'd probably never get a trade as the market's just not conforming to your fundamental outlook. A technical analysis approach can be something you can learn, but even then, there's still a chance that you miss something that may alter the plan completely. Unless you understand virtually all aspects of technical analysis, this is something you're going to have to live with. The following chart here, this is an example of one of our trading strategies. And I've highlighted the entries that were determined by the strategy with the red box. You didn't need to analyze the chart to see them. There is a technical aspect to these setups as well, and let's see if you caught them. Number 1, this is a double top formation that's regarded as a reversal pattern once confirmed with the break of the valley between the two tops. Number 2, I've added a green line to the valley support, and price has broken the valley, which confirms a true double top reversal pattern. 3, price is basing under the green line, which was once support and acting as resistance, and this is a bearish chart formation. The trade entries, without you even needing a clue about technical analysis, set you up with a great day trade that made more money than some people can make in a week at a job. Remember though, technical analysis can be wrong, which means our trading strategy can be wrong. Since losses are a part of trading, is it really wrong or just a function of the random distribution of wins and losses? Now we're traders looking to make money from the instruments that we're trading. Analyzing markets can be a full-time job and perhaps can get you a job at CNBC, but it's not going to make you any money. Getting your hands dirty and understanding the price movements and then taking advantage of them is where you make your money. And that's what we do every single day in our trade room and in our inner circle, make money and teach others how to do it. Come into our trade room and see that trading can be simple. Now, it's not easy, and that making money without understanding any fundamental aspects is something that you can do.